Hello, welcome to this live stream, Saturday, 10 a.m. Eastern Time. Hi, Lucas. It's good to see you again. And today I'm going straight into the topic for this live stream, which is trading the Fibonacci Golden Zone. So probably the first thing is to find out what the Fibonacci levels are, or they're also called the Fibonacci retracement. So that's the very first thing before we talk about the Fibonacci Golden Zone. Let me know if you can hear me okay. Does it sound good? Just let me know in the chat box. And at the same time, let me know where you're streaming in from. Also, what you trade. These technical analysis skills that I teach work with various types of trading. So be it Forex trading or cryptocurrencies, stock market, futures. It's the same basic technical skills that we use to interpret chart patterns. So let's know what you trade. And whilst you're at it, don't forget to hit that like button. That always helps these live streams. Good to have you, Tony. So the Fibonacci. The Fibonacci retracement is a method of technical analysis used to determine support and resistance. That's it. And drawing support and resistance is definitely a skill that you acquire with time. But in the meantime, whilst you're busy acquiring that skill to identify areas of support and areas of resistance, the Fibonacci retracement tool could actually help out. And it basically automates the process of drawing your support and resistance lines. So that's the very first thing to be sure of what this Fibonacci retracement actually is. The Fibonacci retracement is based on the idea that markets will retrace, period. Just looking at a chart, you'll see the green candlesticks, you'll see red candlesticks. It's just the way it is. You will identify a trend, and at the same time, after a period of time, there will be a pullback. And Fibonacci, or the Fibonacci retracement tools, tries to predict how much that pullback would be by this Fibonacci retracement tool. It predicts a portion of that pullback. And once you can identify the fact that there will be a pullback to a certain amount, then you'll be able to stay in that trade longer or exit the trade, depending on which way you are trading. So that's very important. Personally, I use the Fibonacci retracement tool. It seems I use it a lot more to stay in my trades longer. So I'm in a trade, it's upward trending, and then there's that pullback. And it's pulling back and it's pulling back. And the question is it going to continue to pull back? Do I need to exit the trade? Or is it simply going to retrace a certain amount and continue on its upward trend? I know we've all been there where you've been in a trade, you see the pullback, you exit probably before your stop limit. And the minute you exit, this thing begins to move. Situations like that are pretty common. So again, with the Fibonacci retracement tools, it helps you avoid these situations. And the very third point is that the Fibonacci retracement is definitely a popular tool that technical traders use to help identify these strategic places. So where are you going to put your stop loss? Are you going to put it at the very point where it's going to retrace up to? Sure, do that and you'll be thrown out of your trade. And as you're thrown out of your trade, then the trade will begin to continue in its upward trend or the downward trend, depending on which way you're trading. So again, it helps you set your stop losses at certain key points. So that's it for what this Fibonacci retracement tool is. And of course, the main thing that we want to talk about today is the golden zone. And after this slide, I'm going straight onto the charts to show you how this Fibonacci zone is used in trading. Apologies for not showing my face, but it's going to be a faceless live stream today. I had surgery on my face, and I am not wanting to show the bandages and the like. So that's why there's no face. It's a faceless live stream. I'll be back with my face next week. Okay, so now let me take you to the chart. Let me see if I can find my first chart. Okay, first chart is going to be Solana. Yes. Okay, so this is my Solana and Tether chart. And these colorful levels that you see, these colorful areas, these are the Fibonacci retracement levels. They were drawn in an automated way. So I'm actually going to draw it on my next chart. But for this chart, I just want to show the golden zone. And so what I have done is I went in. Now this chart on TradingView, when you plot it, it does show up in this colorful way. But what I have done is I have gone in and I actually, let's see if I can show. I took these numbers, the 61.8% and the 50% levels, and I turned them, I changed the color to yellow intentionally so I can create this golden zone. And the golden zone falls between the 38.20% line and the 61.8% line. It's as simple as that. And it straddles the 50% line. So we can see the trend line, this dotted line to the left, and we can see the general trend is upward, or was upwards. And so now let's move it closer to home. Let me make this a little tighter. Okay. We want to identify, if you look at these last three candlesticks, let's make that, yeah. Okay, so candlestick 1, 2, 3, these last three candlesticks. This is what we do with this 61% line. You can see if we go further back, the candlestick to this left here, right here, let me draw this little arrow here. As soon as price action, let's get this right. Okay, struggling a bit. So basically where we have this discontinued arrow here, this white arrow, you can see that the candlestick, this green candlestick broke above the 61.8% level. And the minute it breaks above, that is the cue. That is the point at which you know that once we can have a candlestick that closes, again, the key point is not that the candlestick enters the zone, but that the candlestick closes in the zone. And the minute it closes in the zone, we see price action go. Let's see what chart this is. This is a daily chart. So we have 1, 2, 3, 4, 5. You know, we got almost like 2 weeks of price, 2 weeks, yes, 10 days maybe of upward moving price action after the close right here. Not a problem. Again, we're trading within the golden zone until we have price action closes outside the 50%. No, which line? Outside the 61.8% price level. It closes the first day. That was a fake out. The next day, we go back into the zone. The third day, it closes. There it is again. And what happens after that? 1, 2, 3, 4, 5. So 5 days of downward price action. Thank you, Victor, for that wish. I get the bandages off in another few days, and I'll be back, I hope, with my face this time next week. Hope to see you then. Very interesting. So if you've now been studying the charts at this point, so let's draw. I like to use these rectangles. So now we have this area. Okay, so price action is coming and going. It's not doing anything decisive until green here decides to break back into the golden zone. So back into the golden zone. So of course, as soon as it breaks into the golden zone, that's a sign to get back into a long position. And it's going to continue that way. So now price action is hanging between 61.8 and 50%. So the guarantee once you break one level is that you will run to the next level, but then there's no guarantee that we're going to break beyond the next level. So are we going to break above the 50%? That's the issue. So if you're in a trade, by the time you hit any resistance, it's always safer to exit your trade. Professionals exit their trades on the uptick. So as price is going up, they've entered their trades at the 61%. Price is going up, heading to the next price level, the next resistance. It's time to begin to take profit, because at this point, we're not sure what is going to happen, because we're at another resistance. We're at the 50% price level. And that's all it is. Okay, so what I'm going to do, I'm going to go to Bitcoin. Now, we're all interested in Bitcoin as cryptocurrency enthusiasts, simply because, I'll find my Bitcoin pair, simply because what Bitcoin does, all the other coins do. So I'm going to remove my Fibonacci drawing off here. Okay, so I've taken my Fibonacci drawings off, and this is Bitcoin and Tether. It's a daily chart. And so what I'm going to do is I'm going to draw my Fibonacci levels. So to draw your Fibonacci levels, you're looking for your swing low and your swing high. You're drawing your levels between a swing low and swing high. I can literally draw a level, a Fibonacci from this level to this level. But that's not too useful. But what you want to do is you usually want to draw your Fibonacci levels on your higher time frame. So you want to be drawing your Fibonacci's on your daily time frame. That's important. And then you want to go from the low point and you want to go to the high point. Okay. Now your Fibonacci level is this symbol. And if we come out to the left here, I hope that's how everybody's trading view is set up. But to the left here, right here, is where you will find, there it is, the Fibonacci retracement. Now I have favorited it. So because I've favorited it, I have it on my moving toolbar here, which comes in handy. Okay. So all I need to do now is I need to click on that retracement tool, go from my swing low, pull it up. That's it, in one movement, holding my mouse down the whole time. And what I like to do is I like to go to the top of the candlestick, to the candlestick, not to the top of the wicks, but to the top of the candle wicks. See, guys, I want you to look at what happened. As soon as I did that, look at what happened. Let me see if I can highlight the, let me use this, maybe this. Can you see right here? No, I'm going to use, let me use this rectangle again. Okay, can you see the white level? Can you see how price action at this point touched right here? And at this point also. So we're going to analyze this in a minute. You see those two rectangular boxes? When I drew the Fibonacci retracement levels, you can see that throughout the price action used this 61%. So this is a very strong level, this 61% level. So that's why this is so key, this 61% level. As well as that 38. Okay, so if you're shorting, then you're looking at the 38 coming down. If you're longing, you're looking at going into the zone on the 61.8. But look at what happened, guys. Just look at that. From drawing that Fibonacci retracement tool, can you see how price action struggled at this very strong level? Price action just sat on it, telling you this is an awesomely strong support level, very strong support level. I'm going to let's increase our chart a bit without losing perspective. Yeah, that's what I mean by not losing perspective. Okay. Okay. So look at this. How many days do we have from here to here? So we have from May 19 to July. Oh, wow. Look at that. May 19 to July 19. We have 2 months. So for 2 solid months, price action played around this 50% Fibonacci level, attempted to drop. Remember when we'd wake up every morning and Bitcoin had dropped some more? Dropped and dropped, but would not drop below this 61.8% level. So if you are holding a long position, say you're holding a long position, you should have some relative confidence that for as long as price action stays above the 61.8, you're good. The minute it breaks below the 61.8, you may want to be out. Now, for me, I've been holding Bitcoin since 2017. I've been buying and selling in between. So generally speaking, I don't get excited when I get a price dump. But for those of you who are maybe trading, you're day trading, you picked up some Bitcoin at a certain point within this time period, then you may want to have that confidence around the 61.8. Once price action breaks below the 61.8% price level, which is that it breaks out of the golden zone, you may want to consider exiting your long positions. And that would have been not a great situation for us if Bitcoin had broken further below. But look at what happened. It did go down on this day. It attempted to, remember, it went all the way down to like 29,000 or something like that. Yeah, it did do that. I'm trying to see where my prices are. Okay, let's forget price for now. But the fact that this creates this nice support level. This is how you trade in an informed way. This is how you trade with an understanding of how price action could go, which way it could go. That, guys, is really always the $1 million question for traders. Is price action moving up or is price action moving down? And that is what informs our trades. And that is what makes the difference between a winning trade and a losing trade. Your golden zone is something that is important to keep an eye on when you're trading. Now, if we look at what's been going on with Bitcoin, let's make this. Oh, look at this beauty. So increasing this chart, just look at this. Look at this beauty. How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 10 days Bitcoin has been on the upward move since it was able to keep support at 61.8. And once it broke into the golden zone, guys, you can see what happened. It was mooning. It's been mooning ever since it closed in this golden zone. And that is what that is how you would trade with your golden zones. I use it all the time. It's something I use to just give me a good idea of how my trade is going, whether I want to stay in a trade. It gives me also a good idea of where I want to set my stop losses and my take profits. You always want to set your take profit before a resistance. So we always want to set this before a resistance. You always want to take profit before your resistance points, because that's why they're called resistance points. They're resistance because there is a greater chance that price action will be, there is a greater chance that that price level, that resistance level will resist price action going through it. If it breaks through it, boom, you're back in the trade. You can increase your position sizes. You can open your fresh positions. And this is basically how I use the golden zone. Now, if any of you use this golden zone in your trading, let me know. If any of you use the Fibonacci levels, just let us know in the chat box. Just say yes. If this is your first time of hearing about the Fibonacci levels, say so. You know, let's make this a two-way stream. Let's hear your thoughts. That's it for the teaching for today. That's all I have. You know, I like to share the tips and strategies that I have learned as I have gone on in my trading journey. It's not something I knew about early in my trading journey. So I'm hoping for those of you who are new to trading that these learning sessions, these live stream sessions, even the videos on my channel will actually help your trading journey be a little smoother than mine was. Yes, I had a rough trading patch, as do all newbies. You lose a lot more money than you make. Yes, you will make money with trading. It's always fun when you make money, but there's no point making $100 today if I'm going to lose $250 the very next day. Yes, so Kiana, you say you tried and yeah, you're going to keep on trying. You're going to keep on practicing how to draw it. This is the tool right here. So you want to find it. It's called the Fibonacci retracement tool on trading view. So Tony's saying, please, how did you configure your Fibonacci? I mean, the figures between each lines for SR. So I guess that means for support and resistance. I actually didn't configure them. That is what the Fibonacci levels do for you. The Fibonacci levels put it all together. So if I remove this, if I come out of this and get rid of, let me try and get rid. Okay. Okay, so several questions. How far back to the swing low? So you can see on my chart, I've zoomed out. I zoomed out intentionally so I can get the lowest point. Now, if, say, I don't have to start from this lowest point, which is July 2020. I could decide to zoom in and swing high and low from this point. It just depends on how much of a bird's eye view you want to get. So the further out you go to draw your Fibonacci levels, then your zones are going to be wider. Your levels are going to be wider. Okay, so if I were to draw my Fibonacci from this point, I click on that, go to this point, because this is I could decide to take my swing low from this point and go from here to here, and then click. It creates the levels for me. So if I decide from here, then what happens is we can see price action is operating below the golden zone. But we can see that from where we started, this lower 100% level down here. Okay, so this forms the base, and we can see the price action right there and here. You can see this. Okay. At this same level, at this same breakout level, 6 months ago, price action went up, came down to the same breakout level again, down here. Same thing. Can you see it? That shows how strong this level is, this 100% level. Whenever price action comes, the number of times price action touches a level, like all these areas now, all these areas where price action comes and touches, shows how strong that level is. So this is a very strong level. Okay. And so we see price action came down here, comes down to the same level that it came down to months prior, and it bounces right off it. That is what a good, strong support level will do. And as a trader, when you see price action coming down, you'd be expecting that something's going to happen at this level. It's either going to break, like bounce back up, or it's going to break down. Guys, if it breaks down below this level, like you want to be out, like, right? You want to be out of that trade, because look, it bounces, it bounces, it bounces, it bounces. All these times it's bouncing above the level. The minute it breaks down below it, you're out, unless you're in it for the long haul again. So there's different rules for long-term investors as compared to traders. So here we could equally say price action has gotten to the bottom of the golden zone. The big question is, can Bitcoin break into the golden zone? Again, if it breaks into the golden zone over the next couple of days, you want to be riding that baby to the moon. Because if Bitcoin should now break into the 61.8% zone, you can believe it's going to go up to the 50% before it makes a move to resist. Again, you got to remember, with trading, it's all about probability and chances. We're always looking to increase the probability that price action will go one way rather than another. And we work with the probabilities. Let me take some more questions. So Tony, I didn't configure these numbers. These are the Fibonacci numbers. They exist in science. They're used in science. They're used in outer space. The Fibonacci series of numbers are a set of numbers that are used in medicine. And someone a while ago decided to apply it to trading. And so that's why we have these preset percentages. And all you do is draw them and abide by them. Okay, I'll look at Litecoin in a minute, Lucas, but let me take another question. So, Kiana, I hope that answers your question about how far back to the swing low do you take it back. You can take it back here, you can go back there. It just, at the end of the day, so long as you're swinging from a low point to a high point, the levels will be meaningful. Okay, and so Lucas wants to know about Litecoin USD. So let me come out of this chart. Let me find my Litecoin chart somewhere here. There it is. So here we have Litecoin. And, you know, guys, you have to understand that what Bitcoin does, most of the other coins do. You know, to a great extent, the price movement of the altcoins will follow the price movement of Bitcoin. So that's why you look at the different charts and they all pretty much seem to look the same. They're doing the same thing. You know, you could have sworn this is a Bitcoin chart because Bitcoin has done this same move that Litecoin here is doing. And again, we're on a daily chart. Sometimes it's hard to get a perspective. Okay, let me try this. Okay, so this is Litecoin. And we can see that Litecoin has done basically the same thing that Bitcoin has done. It came down to this level, which was, if we draw our fib, let me look for a good point to draw the fib. Just a question of how far out you want to zoom out. We could draw a fib from this level, this nice low. We could decide to take it from here, but I think I want to take it from here. So let's click on this, go low, and then go high. Come out of there and see what we got. Okay. So with Litecoin, we can see again this price point here, this price point here, and this price point here. See, this is a revisitation showing this the strength of this level, the 78.6% price level. Okay, you know what? I want to mess around with this a little because I don't know why I don't have my price. I want my prices. I want to see my prices showing. The levels are showing in percents. That's okay. I'm showing prices. Let me go back to values for now. Yeah. Okay, so this actually shows, let me see, does it show values? Okay, I guess you guys get the point. You mess around with it to figure out how to actually get the price values of Litecoin. That's what I want to see, and not the percentages. But looking at it as well, you can see that Litecoin has bounced and right now is heading to this golden zone, to the bottom of the golden zone. So same as Bitcoin, if Litecoin can keep going and the minute it breaks into the golden zone, we're good. And if you draw it from a different aspect where price action is already in the golden zone, same thing. Then you're looking at it coming out of the golden zone. And then, you know, so basically you're looking at it breaking above the next resistance point. You can, Kiana says, so only use it on the 1 hour. Can you use it on the 15-minute? You can use your Fibonacci levels on most of your levels. It's usually you want to start off on the daily, because on the daily or on the higher time frame, maybe even the weekly, but usually the Fibonacci levels are drawn on the daily, and you're using that to get a bird's eye view of where you are in the time space. In the price zone generally. As you are trading, yes, Kiana, as you are trading, you can actually decide to, so let's go to another time frame. We can decide to go to you said the 1 hour, so let's go to the hourly. And okay, so let's come out of Fibonacci for now. That's a Fibonacci. And let me exit out of this. Remove the drawings. Let's remove the drawings. So here we are. This is your this is our 1 day. So let's go to our 1 hour. Okay, so here's our 1 hour. So you're in here, you're in a trade, you're looking at the 1 hour. You're looking at the 1 hour and you're trying to figure out, okay, you did say 15 minutes. So let's go to the 15 minute. Let me go down to the 15 minute. Yes. So, okay. So here you are, you're in a trade. Oh, look at this beauty. You could decide to create a Fibonacci set of levels, because remember, Kiana, Fibonacci retracement levels, the tool actually, all it does is it helps you draw support and resistance levels, and it draws them at set predicted levels where there's a likelihood that we can have support and resistance. So there it is. We're going to click on this. We're going to go from a swing low. We're going to take it to a swing high, the top of a candlestick, not the wicks there. And yeah, I've just drawn my Fibonacci levels on my 15 minute. So if I'm in a trade, it's going to help me understand what's going on. Now, again, this is nice because we see a level. We see this green level. We see price action comes down, but doesn't break below the green level. It moves back up. It keeps coming down again, and it actually breaks down below the level. But I can tell, and you should be able to tell from today on, that this is a strong level because look at this wick. So this candlestick was red. It came and it was red. It came all the way down here. And within a 15-minute period, it ricocheted back up and ended up green. So this tells you that this level, super strong. And what is this level? It's the top of the golden zone. Guys, here's the golden zone showing again. It shows you that this golden zone is critical. And what it's showing you is price action has moved up on this nice uptrend. Okay, so there's this nice uptrend. And we have this retracement. And the Fibonacci levels tell us that this retracement will only retrace to a certain point. Now, I'll rephrase that. The Fibonacci tells us that there is a greater likelihood that retracement will either stop at the 23.6 and then head back up, or stop at the 38.2 and head back up. So what is done in this case, it broke down below the 23.6. It came down to the top of the golden zone, but it's so strong at this point, it does not break any lower and it ricochets back up. If you were in a trade just trying to hold on for dear life, you could decide to stay in the trade. Once you see that it's struggling at this rectangle, you can see there's that struggle going on. Oops. You can see there's that struggle going on to whether break down below or ricochet back up, and you know the retracement wins out and it heads back up. What I see going on here, are we still on Litecoin? I see a nice W playing out here. So we could have a down, and then we could have an up, and then we could have another down. And then we're looking out for something like this. So this is the W. It's a funny tool to use, this one. So W. And again, for those of you who maybe you're a little newer to technical analysis, the W, or the double bottom, is a very, very strong continuation pattern. Whenever you see a double U or an M, for those of you who like to short, it shows very strong price action at these points. Very strong support, I mean to say. Strong support. Strong enough to push price action back up every time it comes down to retest the level. And this is how we use are Fibonacci levels, especially the importance of the golden zone. If price action for Litecoin were to break down into the golden zone, and that's not too great for the longs. And that's pretty much it. I hope that's been helpful. Any questions? This is the time to ask. So yes, you can use your Fibonacci retracement tool on most of your levels. Generally, you want to start on your higher levels, but as you're trading, you may want to draw it on a smaller time frame just to understand price action a little better, to understand maybe where you want to set your stop loss. Again, if you're going to set a stop loss, guys, you're not going to set it anywhere before this green level because it's going to hit it. You're probably going to want to set your stop loss probably a little below there, below the support level, because you don't want to be thrown out of your trade if price action is going to go back up. The green is to push price action back up, and your stop loss is below it. Of course, if you moved your stop loss above it, then what's going to happen? You're going to be out of that trade, and then price action will head back up. Kiana says, what's the difference between the Fibonacci retracement and the Fibonacci extension? I'll probably do another live stream on the Fibonacci extensions. The difference is probably in the words, the fact that with the retracement, we're looking at retracement of price action. With the extensions, we're looking to predict how far price could go. So the extensions would show you how far price action could go beyond this point. And then it would use these levels to show that it could get to a certain level or a certain level and a certain level. And so that would be for a different live stream, but there is a clear difference between the two. But for this live stream, we're working on retracements. And yeah, Fibonacci extensions. I probably need to make a video on Fibonacci extensions as well. For those of you who are new to my channel, welcome. And in the chat box at the top, I think I did. Yes, I did. I pinned a link to, I've made 2 videos on the Fibonacci levels. So click on that. It's time to learn, learning time. This is the time to acquire the knowledge that you need to help you when you get into those trades. I need help many a times when I get into trades. Oh, I gave you a signal, Lucas. What, with Litecoin? Yeah, but the problem with the cryptocurrency market is the volatility. The market is so volatile. It goes up, it comes all the way down. Sometimes it's hard to understand price action with the volatility. And it's the volatility that can kill your trades. So the fact that Bitcoin is heading up is awesome, but the fact that it's going to head up and it's going to literally look like it's retracing on you is going to throw you out of your trades. And that's why we need as much technical analysis as we can to make sure we know what we're doing. We know where we're setting our stop losses, where we're taking profit before volatility gets to our trade. Okay, so use that link in the chat box at the top. Check out the 2 videos. They're actually a 2-part video series, a part 1 and a part 2 on how to use Fibonacci levels in your trading. I hope today's live stream has helped you somehow, some way. If it has, hit that like button, comment below, and I hope to see you same time, same place next week. Happy trading. Take it easy, guys.